Inventory levels are sitting at their lowest levels since 2006. What does this mean? Hey everyone, it's Hripko here, and the stats are in for February 2023. And so if this content is for you and you like to see it, please hit that like button and subscribe, and you can get some more real estate content. Before heading into the numbers, let's quickly touch on what's been going on in our marketplace. The Bank of Canada is scheduled to issue an interest rate update on Wednesday, March 8th, and that is making it the second announcement of 2023. So in 2022, we saw interest rates get increased 7 times, followed by another increase this past January, which brought the key rate up to 4.5%. So throughout the rate hike updates, the Bank of Canada has repeatedly cited inflation as the core reason for its decisions. So what are we expecting to see on Wednesday? Experts are expecting a bit of a slowdown with the rate hold, where the bank will show that they're committed to leaving the rates unchanged. I do personally have a feeling that we will be seeing one more small increase, but let's stay tuned to see what actually happens. Now on to the statistics for the month of February. Starting off looking at the overall Calgary marketplace, we are seeing typical seasonal behavior with sales, new listings, and inventory levels that have trended up compared to January. However, we are still remaining amongst the lowest February levels seen since 2006, with only 1,740 sales and 2,389 new listings for all product types and price ranges. So why might this be happening? While higher lending rates are impacting sales activity as expected, we, however, are seeing a stronger pullback in the new listings, which is what is keeping those supply levels low and supporting monthly price gains. The question is, why are we seeing that pullback? And it could be for a number of reasons. Many sellers don't know where they're going to be going because they have the low inventory levels. So it kind of turns into this vicious cycle where they don't know where they're going to go. So they don't want to put their home on the market. And so we just keep on going like that. Prices are still sitting below the May 2022 peak, although we are still very early in the year. If we don't see a shift in the supply soon, we could see further upward pressure on prices over the next few months. Months of supply is sitting just under 2 months, still keeping the overall marketplace in conditions favorable to the seller, causing further upward pressure on home prices. The benchmark price increased by nearly 2% from January levels and last year's prices. The detached market has felt most of the impact of the higher interest rates, where both sales and new listings reported year-over-year declines. While the seasonal monthly gain did see those inventory levels rise over the past 2 months, levels are still amongst the lowest that we've seen in February, leading to the months of supply trickling just below 2 months, showing some tighter conditions in this sector. So we did see the benchmark price rise from January to $635,900, yet we're still below the peak that was reported last May. Supply continues to remain a challenge relative to the demand seen, especially for those lower priced product. We are seeing conditions shift to balanced territory for homes priced above $700,000. Now into the semi-detached sector. It's seeing very similar conditions to the detached market, where despite that seasonal monthly gain, both sales and new listings fell from last year's record high. Inventory levels are beginning to rise over the levels reported over the past few months, but they are still remaining amongst the lowest that we've seen in February for this sector. The months of supply fell below 2 months, which is sitting higher than last year's extremely low levels, but the conditions are still favorable for the seller. Benchmark price in this sector is sitting at $568,000, nearly 2% higher than January and 3% higher than last February. So the townhouse sector is seeing exceptionally tight conditions with only 1 month of supply, and the sales to new listing ratio is sitting at 87%. Sales have eased from the peak, but they are remaining relatively strong for February, and that's likely due to the interest rates shifting the buyers towards a more affordable product in the marketplace. Benchmark price reached a level of $369,700, 2% higher than January and 9% higher than February 2022. And in this sector, prices have reached a new high. Now on to the condominiums. New listings are consistently coming out, and this is allowing sales to continue at their pace and not decline. The persistently strong sales compared to listings have caused the inventory levels to stay pretty low, especially compared to the levels that we've seen over the past 8 years. And that months of supply is dropping to below 2 months. Prices in this sector are increasing, with a benchmark price sitting at $286,000, which is nearly 3% higher than January and over 11% higher than February 2022. So I do want to note that while prices are higher than last month and last year, we are still sitting 7% below the peak levels that we saw in 2014 in this sector. So there's still lots of room for growth in the condominiums. Anyways, that was it for the monthly statistics for February 2023. I'm Alex Hripko with Royal LePage Benchmark. Thank you so much for tuning in, and I look forward to seeing you guys next time.